All right, we are up and running. Welcome, everyone. Today is the first ever, in my understanding, I'm pretty sure this is the first ever, SMBU Quant webinar. So it's really focused on quantitative trading. We have Jeff Holden with us. He is a quant trader with SMBU, Kirshner Trading Group in the New York office. My name is Andrew Falde. I'm a remote options systems trader. So I don't do quant type stuff. I don't do fully automated stuff very much, especially on the desk. But we do have the expert here today for that. So we're very excited about this. We've not really covered this topic in great detail, the way that it's going to be brought up today. So very excited about that. Quick reminder about disclaimers on the screen here. SME Trading is not a broker-dealer. This is for educational purposes only. Any type of trading you see is strictly hypothetical and simulated. We're using back-tested data specifically today, which has its limitations. We are very aware of those limitations. We talk often about ways you can, account for those in your back testing, but for the most part, you just have to assume that it's historic and not quite a guarantee of what can happen in the future. So Jeff is on the line.
My name is Jeff Holden. A little over a year ago, so I've been on the desk at SMB in New York for a couple of years now. A little over a year ago, we started really trying to tie in more towards, learning, like being able to automate basically. All intraday setups, but exploring where are ways that we can find edge. And a part of the reason why that was such an interesting thing for us to kind of pursue and to invest time to learn and really try and capitalize on it is a part of it is my brain works that way. So the way I think about trade setups are a lot of times more quantitatively than discretionarily. So, a lot of the guys on the desk around me, they can look at a setup and say, oh, it kind of feels like this and feel the tape and all that stuff. My mindset's a little more quantitative in that I want to see, here's a little more of a finite reasoning for that. And in the markets, you have situations that occur over and over and over again. And although you have different participants every time and different variables every time, it's something that I found, and then some of the other more quantitative guys on the desk have found really has helped our trading a lot. So we started by building alerts, and from there, basically we learned how to code very basic things, and then we have gotten to the point where we have models live that trade every single day, multiple times a day. And so we kind of put together a process for starting with a general idea and then working that idea all the way through to ultimately a model. So, if you, we kind of want to share that process a little bit today and show you a little bit of some of the tools we use in order to kind of formulate ideas and walk through the process. So we are not doing I've got the chat box open, so I'll try and answer, but I'm going to glaze over a lot of the chat. So we do not do high frequency trading. A part of what we have stepped away from entirely is doing anything that would be considered high frequency or market making trading. That's not our game. So although, sometimes we're in and out of trades quickly because the models are set up that way, none of what you see will be high frequency. It is all done as, based off of discretionary patterns that we see in the marketplace. So what you're looking at is this ETFs idea is something that I just started June 17th, so last week. And it's an idea that came up out of, we see these ETFs, especially lately, that are trading pretty big moves. I cannot make the font larger in this way, but I will go back to it. So the idea is, okay, what are some of the things that we can use to what are some of the tools that we can use to find if an ETF could potentially provide a trading opportunity on the day. So this is the basics of our script. We build these in Cloud Quant. Cloud Quant is, if you haven't been to the website cloudquant.com, I'd highly recommend, especially if you know a little bit about coding, come here, and there's some good resources. Sign up for an account. There's some good resources about basic scripts, and it's pretty intuitive. If you have questions, you can always email me, and we can walk through it. But anyway, so this was a very basic idea we had of, okay, if we want to find stocks in play, we look for RVol. If we want to find ETFs in play, why don't we just start with if they're trading a decent amount of RVol after 9:45? So that's our basic idea. And as we go through this, I will talk through the process that we've kind of put together in making trades. So the steps of each model. The first step is data curation, and that's what we use Cloud Quant for. Is, yes, it's a backtesting tool, and it's great for backtesting, but it also allows us to reference a massive amount of data, and most of the data can be found in this documentation tab. So these are all the things that we can reference. So I said our general idea is if it's trading with strong RVol, like RVol above, I think 1.25 after 9:45, there's potential that there might be edge there. So the way that we would pursue that idea is first run a very generic backtest, which we had done, and say, okay, if we take these trades, are we seeing this KRE fired at 9:45 on the 3rd of January, and like you can see in Cloud Quant, I literally just clicked on the name and the chart pulled up, so it showed where I entered and showed where I exited. If I could make that trade a lot, I would love that. If I could be alerted to every time this trade where I short it pretty early on and then cover it much later on in the day, and it worked out well. Okay, RVol is relative volume of a stock. So here I can pull up a market maker box. These are the market maker boxes we have. So you can see RVol, RV is 3.9. So Dropbox today traded almost 4 times the normal volume of the last 21 days. So it's a basic metric of if an RVol is above 1, it's trading more volume than an average day, so you've got more participation. So so we know we have the basics of a potential trade idea here of, we can look at RVol, and RVol is showing that the stock could potentially move. From that step, what we will start to do is use these tools, and these tools, primarily market data, are pretty extensive in Cloud Quant. What we do is we'll start to look at things like, did it gap? Was there, like, I haven't gone through the entire list of data that we would want to curate for this, but, it's pretty extensive. We have standard things that we look at, but this is where we would kind of get down and dirty with actually putting together a model of, okay, we know that if RVol is there, it's somewhat important. So what are other things that we could look at in order to build a model? What's the difference from the price at VWAP? What's the is the minute ask vol divided by the minute bid vol the volume on the ask versus the volume on the bid, which is, basically if price action's going off here at 37.15, it's going off on the bid. So somebody's selling aggressively. If it's going off at 37.32, they're buying aggressively. So, things like that will start to develop ideas of what could actually tell us how predictive this trade could be. what could tell us that this is going to be a trade that could show edge at all. So so that's the first step that we do. We answer the question, what data do I need from this model? All of it comes from Cloud Quant, and all of it comes from a lot of the work that we've done before to understand what are the most important features for the model. I'm trying to keep this very broad because I'm not really sure from our participants if all this stuff makes sense or not from a trading perspective, but also from a quantitative perspective. So if you guys have any questions, you can always email me. So, you know, this is the first step of us making a model, is going from, you know, a general idea and then seeing, hey, if I take that general idea and I take a trade, is there a chance that the trade's going to work out for me? And if it does, that's awesome. And then I want to find the data that will support, that'll actually give me edge. Because right now I don't have any edge, I just have an idea. So next step, feature analytics. So once we have the data, once we have pulled random things, and if we could backtest faster, I would definitely do it and do it live. But you know, if you guys are interested, I'm happy to take you through each one of these steps over a couple weeks to show you exactly how I walk through everything. But for now, we'll just start with this basic step. So say that I've done let's do APIs. This is interesting. So TA-lib. So volatility indicators. So I've done, momentum indicators is probably a better example. So say I've used this momentum study and found that this study is actually potentially indicative of what we want to do, of what we're looking for as far as the trade setup. The way that I do that is I code it into my script. I pull that data out, run it through a CSV file, and sometimes we use Jupyter notebooks depending on what we're doing. And then, you know, determine if that feature is important to this model, and if it is, then it gets moved on. That's how we transform the raw data into signals. You know, we try and find basically what makes the probability of the setup a high probability setup. What gives us edge in that? What gives us the potential? So there are a lot of questions, and yeah, I mean, how about
my sense is,
yeah,
this is the first time we've ever brought this up.
Okay.
This is like we just unleashed 10 fire hoses.
Mm-hmm.
So I'd say just kind of go with what you had planned, because I saw what that was.
Yep.
We're going to get people more. They're going to have more questions and answers.
Okay.
But they're going to at least know if they want to ask questions.
All right. Cool.
So I typed in there. If you use the Q&A box, guys, afterwards we can actually download those questions. It's a little hard to do it with the chat, but if you do the Q&A box, I can download those. We'll review them. Common questions, we'll either write blog posts, make videos, do another webinar. So even if you already put a question in, go ahead and repeat it in the Q&A box for our reference. We're going to crank through this. Maybe some questions will be answered. But even after Jeff leaves, I'll probably hang out for a couple minutes and kind of give the big picture view of the firm and where Cloud Quant fits in and everything. So
cool. Yeah, that makes it easier. Okay, so after we've kind of determined what the most important features are, or the potentially most important features, that's where we develop a strategy. That's actually where we can take something and say, hey, we understand we have edge in this situation. Now we can apply different elements to it. We can start to look at how we're adding liquidity versus taking liquidity, what our profit targets should be. You know, we can actually put together a trade strategy. Right now, in this that you guys are seeing on your screen, we have a general idea. We have an idea that if our vol is higher in ETF names after 9:45, they will be more in play. That doesn't give me any edge, and I wouldn't expect it to. So I would have to and will go through the process of determining the right features for this, determining which features actually add value to the model, and then hopefully, if I can do that, come up with an actual strategy. And examples of strategy would be, that's where I noticed somebody asked about price. That's where more price action type stuff comes into play of, maybe, I'll try and give an example here of a trade that didn't work out. Well, that's not a good example here. All right. So maybe if it's got RVol, but it's trading right at in the lower 10% of the day's range, or maybe if it made a big down move early and it's got a lot of RVol, it's not a good short. Maybe it's a better long. Things like that that's where the strategy comes into play, but we kind of let the features tell us that. We try not to predict. We try and start with a basic idea of, this is what we think might be an important element of the trade, and then let the features kind of show us what elements are important. And most of the legwork is done in these first two steps of, getting the right data and understanding the right features. By the time we get to strategy, we probably have spent a couple hours in the model and looking through the trades, understanding what makes sense. And the big question we're trying to do when we put together the strategy is, it must identify, and I think Andrew's talked about this before, but the economic mechanism and the motivation of other traders that causes them to lose money to us. So that's the question we're trying to answer here. And it's not about winning and losing in trading, but there has to be a reason, there has to be a motivation for this specific circumstance to occur in all of the price action that occurs every single day in, whatever the 3,000 stocks that trade, every single day in the markets. There has to be a reason for this. And we are trying to identify what the situation is and then identify the reason for it. And that's where we come up with the strategy. This XLF chart that you have going on right now, the reason that people could lose money to us in this trade would be, it's trading strong RVol, but maybe it's just sitting in the middle of a 5-day range. Maybe it's sitting in the middle of a 20-day range. Maybe it pulled down to support and held that level and couldn't break below, and now it's making its way back higher. I don't know the answer to that question, but as I go through the model, those are the questions, as I build the model, those are the questions I want to answer. Because that's where the strategy actually comes in. It's understanding, out of all of the situations that can occur every single day, this specific situation occurs over and over and over, and occurs over and over and over because of this real reason. And typically this situation comes up because this is the motivation of the players involved. So that's what we try and do. After that, then we actually go in and can backtest. Cloud Quant is a backtesting engine. We try and use backtesting only as like kind of a last step to confirm our theories and to work through like kind of the end games of models. We try not to use backtesting as the decision-making process. We try not to look for great curves early on, because when you have those early on, you're probably either overfitting or you haven't considered a lot of options. In backtesting, we'll also go through different time periods. So, anybody that traded the markets earlier this year, particularly in February, we saw a lot more volatility. Do our strategies, or does this strategy overperform in a highly volatile market? Does it underperform in a highly volatile market? Is it something that we shouldn't run at all because it just loses money in those markets? So those questions all get answered only through backtesting. So, no volatility is a situation where you have to be aware of too, because maybe your model only works in high volatility, which is the case of something that, or no volatility, which is the case of something that we just built, was it only works in really high volatility. So now if we get to a situation with February coming up again, we know that that's probably the best spot. So, but C is really, really important for us. we try not to let any bias creep in of how this strategy was developed, what work we did into it, whatever. The only job of backtesting is to help us maximize profitability and understand the situations that we want to be running a model. And then finally, if we get through those other steps, we get to the deployment phase, which is the fun part. That's where you can actually get paid on these. That's where you can kind of see the P&L every day and learn from them. And that's where your model actually takes live trades, which are really, it's a cool experience to have that, because, today I was trading a couple names on the open and I had a model that was trading like 7 or 8 names. And, it's kind of exciting because you see the P&L swings and you see stuff happening, and it's because of your ideas, but you don't have to do anything with it. You just kind of sit there and watch it. So it's a really cool element to have gone through that, but you have to go through these other steps to get to the deployment phase. On our desk, you have to, if you get through backtesting, you have to forward test for 10 days live, and with really, really small size. Then you get to paper trading, which is you're trading it with the actual size, but it has to be making the right trades, exiting appropriately. You basically have to make sure it's running. So you're kind of a month in before it actually graduates, which, the graduation element's kind of cool. You actually get to name the model, you get your own account for it, and it runs autonomously, and the only job you have is to make sure that it's running appropriately. And then as you kind of go, you can bump up size when it's trading well, and in the environments that you kind of see are best for it. So yeah, and then as you're doing it, you're back testing, or you're looking at new results, or you're forward testing along with it, and trying to develop improvements for the strategy. This is where we're starting to play around a lot more with machine learning, and being able to kind of run models simultaneously. Or run strategies, as I say, simultaneously, of where is, given this situation, what's the probability of this model being effective versus not being effective today. So that stuff is kind of the next frontier for us, and we're really getting into it. But these are the basics that you have to cover for every single model. And it all starts with typically the most generic ideas you've heard of. But then we go and do the work to turn them from a basic idea into something. And when they turn into something, you can, these are all different things that I've built on the left here. And they can turn into something really cool. So anyway, I'm happy to answer some questions for the next 15 minutes. Happy to share pretty much anything I can with you guys and talk through it.
Cool.
Andrew, do you want to run some Q&A?
There's a Q&A box
cool.
I ask people to use. Okay.
All right, I'm gonna knock through these real quick. Difference between system and quant trading. I don't know how you guys describe system trading. For us, quant trading is anything that is partially automated or fully automated. So there's something on our desk called a single stock script, which is really cool technology, which the most basic version is if you want to short something that has gone up in ATR from VWAP, for me, I press a button, it's Shift M, and for that symbol, it'll run only on that symbol. It'll short it if it gets an ATR above VWAP, which ATR is average true range for people that don't know, which is over the last 21 days, the high and the low of the stock gives you the average true range. So if it's trading an ATR above VWAP, which is the volume weighted average price on that day, it's likely that it might be a little extended. So that's just something I have that I can throw on, and that's a single stock script. So that is considered quant trading. And that goes all the way to ensembles, which are, 4, 5, 6, 10 models that all can run simultaneously. And maybe aren't all entering the same trades, but they're potential trades that could come out of a setup. So that's how we define quant trading. So I don't know how to answer the question. Is it different between systems trading and quant
Yeah,
trading?
if that's related to like our workshop, or system is a more generic term, I would say it's just a set of rules. But you could trade manually. You could even have a system that involves a lot of discretion. But yeah, quant would be programmed automation, just a higher level, deeper level, I guess.
Cool. Multi-charts or TradeStation. We have a proprietary charting system, which is called GreatPie. It's part of our platform. So those are the charts that we use, and it's pretty intuitive. It's for our desk. And so those are the charts we use. This is DBX, by the way, in the afternoon. And so that's just what we use here. I'm not familiar with multi-charts or TradeStation, so I can't speak to any of that. But I know on our desk we use GreatPie charts. So one price-based quant model. I'd be interested to understand more what you mean by price-based quant model, simply because everything's sort of price-based as far as quant stuff, but we don't just look at price. We have to look at a lot of different features, and that's what this process that we go through helps us do. It's not just looking at, has it moved up in ATR? Has it moved up $4? Is it trading at $100? We have to look at the volume. We have to look at how the volume's occurring. We have to look at basically everything you would look at if you're trading live. We have to identify that situation, and very rarely is that a price-only question. A lot of times there are a lot of elements that can go into it. So yes, the data is an exact fit with historical and level 2. There are some discrepancies with our data, but it's pretty rare. So one data thing that I wanted to collect was range versus for this one was range versus ATR times RVol. It's a feature that we found was important in other things, probably not in this one, but I just wanted to capture it. So, this pulled the range, the day's range versus the ATR. So day's range is an ATR divided by RVol or times RVol for each of them, and all of that data is accurate. And we can run back to, I think, 2012 on Cloud Quant. So they're risk and sharing other strategies that everyone will use until it doesn't work anymore. There is some of that. Typically the strategies that I work on and that the guys that I work on are occurring in liquid enough names that it really isn't going to matter. We look at things like ETFs because, XBI is going to trade or did trade. I can tell you, XBI traded 6 million shares today. So, I'm not going to be trading 6 million shares in my model, and I'm not worried about that strategy getting taken over by somebody else. There are strategies that you can develop that, other people might do that, but that's why you adjust as you're going through it. Fang Quant trade strategies to help the futures desk trade ES. We're actually considering going the other way around on that, and not specifically for ES, but more for specific markets. So oil, gold, stuff like that. Our Cloud Quant does not have futures data, but we're potentially getting it. And the idea that we have is, could we use the overnight action in the futures market to be predictive of different sets of stocks price action during the day? So we haven't done Fang to look at futures or ES. And, maybe Fang to look at Qs would be a decent idea, but, we haven't done that. The next question, does Cloud Quant work with futures? Not yet, but it will soon. Cloud Quant does not support options data, unfortunately. That's something I've been pushing for because I think it'd be really interesting. What program executes the strategy? So Cloud Quant, we take our scripts, which is here, and I'm sorry it's not larger. I can go into this script and find it. These are, by the way, these are all the scripts that I have on the left. and there are a lot of them. This one's called ETF something or other. ETF ideas. So this is the script. This is all in Python, and it's a super simple idea. And the script will get way more complicated as it goes on. Here's just a different other one that's more of an example of how it gets more complicated. But we start with simple stuff, and then it goes, once it's built in Cloud Quant, then it also shows up in our Great Pi, our Great Trade thing. So yeah, we're fortunate because it seamlessly automates, and so I just click a button every morning and my scripts start. I don't have to do anything else. Look back time for signals and separately to backtest. I typically try and use 2 years, but again, it depends on the strategy. If it's a strategy that could be sensitive to volatility, I'm more sensitive to that, and we'll look back on specific periods. But yeah, I mean, I try and have the same amount of test time and train time or test time and backtest time. So if it's 2 years if I'm looking at 2015 to 2017, I'm looking at 2013 to 2015 to actually backtest it. So I'm never backtesting on the same data that I'm building the model off of. TensorFlow, yeah, one of the guys on our desk uses that. I'm not familiar with it yet, but I've heard it's a good thing. How many trades are made at the graduation stage to validate your strategy result? It's not the number of trades, it is the time. So if a model's running for 10 days and it trades 20 times a day, you're going to get 200 trades. If it trades one time a day, you're going to get 10 trades. If it doesn't trade at all, then you have to get another 10 days. So, we have a team that approves or disapproves any models, and, you talk through it with them as it's going. Public against your wish. Again, I don't have that concern. I've heard that concern expressed, but no one that I know of has had any issues with something becoming public against their wishes. I don't see really a reason for that. I think everybody has unique edges in the market, and your job as a trader or as a quant trader is to find that edge and develop that edge, your edge, as much as possible. The way you think about markets, the way that you think about why something trades in the way that it does. Just like a trade setup, I could give you a model that made a perfect trade every time for me. And it might be something that doesn't make any sense to you, and you may make a different trade, or you could give me something that is, in your mind, a perfect model that makes a great trade every time. And I could look at it and hit out of it at the wrong time, or have the risk reward screwed up because I'm running it in the wrong time periods. Like, all those things are unique because of the way that I think about the markets, or if you build something, the way you think about the markets. So that's why I'm not worried about if somebody's going to try and steal it, because if they do, they probably won't run it very well. And if I tried to steal somebody else's, I wouldn't run it very well either. So I don't think that there's any of that occurs. Certainly not a Cloud Quant that I've ever heard of. So not just in Cloud Quant, but anywhere where your code is not your own private box. At Cloud Quant, everything that we build is our own. I could make something public. They have public scripts, but those are mostly done to get people engaged and to be resources. Like the TA lib stuff, I used some of that stuff to look through the script and understand what it was, and then implement it in my own script. But that's not a script. That was just an idea. It was a really simple thing of, hey, how do they code this in? And that's kind of, I used it as a tool. But none of those things are an entire script. Completely new to coding, where would you start? Well, for my purposes, I started with Python. I actually think you can just Google, let's see, Python Bootcamp, this one. and I'm happy to share this link with anybody that needs it. I'll put it in the chat. Go through this. If you have no idea what to do, if you are brand new, don't have any coding experience, just click through all this. It's actually pretty good. Python's pretty intuitive once you start using it, but you have to. One of the head quant guys from New York says you have to start failing, and I think that's very true. You have to just start trying and failing, and then you'll learn. Where's Cloud Quant? Here we go. So. Historical data for futures, options, stocks, ETFs. ETF stocks, but not futures and options. Brokers that support the algorithms. It's Python, so you could probably export it and to whatever broker you could import a Python thing into. Thankfully, part of being on the desk is we don't have to do any of that because it's seamlessly integrated for us. The 6 slides again, yeah, I'm happy to share them also, but I guess the easiest thing for me to say with regard to everybody that's interested in doing something on their own, I am happy to talk through an idea, to talk through some of the data that I've pulled, especially with this one that we've already kind of made public of this ETF idea. I'm happy to update you guys on what we're finding is the most important thing. It's a strategy that anybody could trade at any time with any size because it's going to be in super liquid names. So, if you want to follow along and maybe your broker has something that you could code in, even as an alert, I could help talk you through what we're finding, and then it would be on you to be able to convert that into whatever language your broker uses. But if it is Python, then you can just use Cloud Quant to build it and then run it through there if you needed to. So it's all integrated, so don't have to worry about one ATR above VWAP. It depends on this strategy, to be honest, and it depends on the day. Sometimes I know I want to take profit quickly if it goes in my favor at all. Sometimes I know I want to just set a stop, half an ATR above that, and leave it alone for the rest of the day. That's why we have these quantitative tools, so you can just kind of throw it out there and see. Yes, you can always manually override the system. I do that probably too often, but I do that because, it helps me keep my sanity of if I've got a lot of trades on and I'm not liking the way the market's trading or something like that. I'm trying to think of a good example. I think last week was a good example of that, where everything was set up and then the market reversed, and so I had to hit out of a bunch of stuff because I know the models, and I know that those models are unlikely to realize their full potential, so I'll set a trailing stop or I'll change it up. No options with the algorithms through Cloud Quant. You probably have to ask Andrew or Mike on this one. I'd say keep at it with the DNA course and all that stuff. That's a really good one. I do not have a PhD. I barely have any experience. I have a year of coding experience, so year and a half maybe. So, good strategy and overfitting. Yeah, the out-of-simple back test is really important for that. And then also the forward testing too. As soon as you have a good out-of-sample back test, you start forward testing, and you learn pretty quickly if you've overfit. Week, you can code in automatically locating shares for hard-to-borrow stocks. And it takes up to, you can code in the amount that you want to pay for those. Write a program with Cloud Quant for beginners. It starts with an idea. Honestly, some of the ideas that we've had have gone from start to finish in less than a week. Some are a couple months. So, to write a program, it depends on your idea and your understanding of it. Just start by failing. Just get in there, get a Cloud Quant account, and start playing around with maybe the most basic trade setup that makes sense to you. We don't use NumPy and Pandas in live. What we do if we're using any of that stuff is I'm sorry, no, you can import it into the system. You can import NumPy for sure. I don't know about Pandas, but I know that there is a script that, I don't know which one it is, but there is a script that I use NumPy in some of it. And on start, I just, right in here, I just import NumPy, like right here, like where it says below import KTG FUNC. I just import NumPy into it, so it's then in the system. Remote trader execute trades. As far as quantitatively, you would just kind of build a strategy, and you can talk through the guys at Cloud Quant about it, and they can help you execute. If you're asking how to build scripts. That's how you build it, and that's how it ultimately develops. I know with Cloud Quant, it's a rev share. If you build a script entirely, and it gets approved. Let's see, results. So you can click a button that says Fund My Strategy, and it submits it for review. And if you have a good backtest, if everything looks good, then that's how you can execute. It gets approved and gets put through the process. There are tons of people to help answer questions. There's this help function down here on the right. If you have any questions, or I'm happy to do that. So yeah, whoever put in the chat, they like the names for the strategy. I have a lot of weird names for my strategies, but they make sense to me. Yeah, anybody that goes as a remote quant goes through the full training for SMB. We start, we're discretionary traders first. Quantitatively, the work that we do is off of our discretionary trading. So there are very few people here that are purely quant traders. I'm not a pure quant trader. I am a discretionary trader that also does quant work. And most of the guys on our desk do that as well. We've all gone through the training program. And we just happen to think more quantitatively, so that's how we try and express trades. Dark pool access, yes, we do have it. You can use it if you need to, but I think one of my models uses dark pools to exit a trade, but most of them I'm not worried about it. Like I said, I'm not fighting liquidity issues typically in these trades. Step-by-step teaching for building a strategy. I mean, that's what this is. It's the basics of it, but the actual step-by-steps that I go through are much more involved than that. And it's more coming from the idea. How much can we get funded? It depends on your strategy. Payout ratio, I don't know. I know for our desk, it's good enough that I'm willing to do the work. So, it's, we get well taken care of for strategies that work well. So, awesome. And I'm sure if you do that, you will as well. So,
well, I know, did you have a hard cutoff?
Yeah, I mean, I do need to bounce. So,
all right, I'm going to keep answering a couple questions.
Cool.
And talk to the guys a little bit more here. So thank you so much for sharing today.
Yeah, to answer Brian, yeah, I have algos running in a real account. I mean, I can show you this because it's not going to matter, but like here's an example of, these are all the different things that are running in the real account. So, we have a lot of things that are running in a real account. So, yeah, to answer your question. Yeah. Any other questions?
If there are, we got through these. So if any more come in, I'll send them over to you, and we'll keep this going.
Yeah, and like I said, if there's interest in this, I do this because this is what makes sense to me. And if it makes sense to other people, I'm happy to talk through further how I go through each of these steps and show you guys too. This was meant to be a really high level overview, and hopefully we check some of the boxes of what you guys would be interested in learning about. But if you do have interest in it, like, I'm happy to continue on. I'm going to continue on with this script and hopefully turn it into a model. And if you guys want to watch, awesome. And if you guys want to provide feedback, that'd be great. So, and Andrew can send you my email and everything like that. So
Cool. Will do.
cool.
All right.
Thanks guys. All right.
See ya. All right, everyone, I want to give you my 2 cents. This is, you know the analogy, dip your toe in the water. Today, I feel like all we did was show you the puddle. We didn't even get your toe wet, because this is a very, very deep topic. This is the quantitative trading is different than anything else we've talked about on our webinars. So if it's something you're interested in, you understood at least a little bit about what just happened, some of the script was on there, and you were reading through and you recognize that kind of stuff. Okay, you know who you are. Now then it comes down to, what is the opportunity? Why would you be focusing on this? You may even be wondering, what's the catch? So the reality is Cloud Quant's free, because Cloud Quant is a door. It's a doorway. It's the window into a prop firm account from the outside. So you don't have to live in New York City. You don't have to fight to get an interview and get in there and show off your programming skills and knowledge about the market. You can sit anywhere you want in the world, fire up Cloud Quant, code your strategy, build it, refine it, test it, and submit it. And if it's good, it speaks for itself. So that's the true meritocracy. And that's what's the opportunity is. That's why there's no cost, because the upside for everybody is the trading potential. So does that mean some people use it and go take it off and trade it in their own account? Of course. But there's several questions out there about, losing, your private information or your proprietary ideas and things like that. Our culture is that sharing adds value for everybody. If this is super secretive and you don't want anybody seeing a single line of your code, if you've seen any pictures of the desk in New York and the way everybody sits side by side and how they interact with each other and walk away from their computers, that's not what this is about. So this is about, hey, I have an idea and I've got it to this level. Does anybody else have any work on it? Yeah, I've been working on RVol too, and then they share ideas and they talk about it. And at the end of the day, usually you don't even have two people agreeing on the same end result. They just share ideas, and then one goes in one direction, somebody goes in another direction, they trade their own strategy. Or they decide to trade different stocks. Somebody wants to trade market stocks, somebody wants to trade low float, somebody wants to trade foreign stocks, whatever, ADRs. So there's just so many ways to apply it that sharing the information is usually going to add more value. You're not going to be competing with people. So if you like the idea of sharing, if you like the idea of collaborating and working together, if you like the idea of using very powerful tools that are provided for free because it's about the idea of building the upside, then this is a good place to start. I come here as basically a moderator, the connector. I run these options and systems workshop, but that world is very much slower, not fully automated. We do some automated tools. We use TradeStation for some of our studies. We do swing trading. We do role-based trading, stuff like that. This is a different world. It's a different segment of the desk. It's a different style of trading. But I do want to be here to help out and kind of guide you guys in that direction if that's something you want to do. So a couple of possibility, this being the first webinar, we're really just seeing, we threw a party and we wanted to see who would show up. We had a lot of people show up, so that's a cool start. So that means we'll probably throw another party. And we'll read these questions and really focus on what people want to hear next and talk about that. So that's basically it. Nothing to sign up for at this point. If you signed up to come to this webinar, we'll tell you about the next one. I guess your next action would be, if you know Python or know it well enough, go sign up for Cloud Quant. If you don't know Python, but you know something else and you'd like to look at this stuff, then maybe brush up on Python. My understanding, I know only things that are easier than Python. I barely know Python. I recognize the structure, but I couldn't code it from scratch to save my life. But my understanding is if you know something else, it's usually a step down. It's easier than going the other way. So kind of takes one of those courses and learn that language and start moving. So another part of the upside is this isn't, if you have a good model and they turn it on, and they say, all right, you deposit $5,000 and we'll match it. But if you lose 5,000, you're going to lose your money and we're going to keep our money. Okay, there are firms in the world that do stuff like that. This is not like that. This is, as far as I understand, I actually don't know the full structure if you come in through the Cloud Quant window, but the typical prop firm world is you're a member of the firm, you join us, you trade, and the firm provides capital, you provide the strategy and the execution, and there's a split on the profits. You don't provide your own money. It is the firm's capital and your strategy, your trading. So that's kind of how we do things. So I'm going to wrap it up with that. Thanks for coming in. That's it. We'll talk to you all later. Have a great rest of your week.